Welcome back. As promised, we'll talk about the commodity market action now. Manisha Gupta is with us in the studios. Manisha, Happy New Year to you, first of all. Are there any commodity markets, global markets trading, or no? It's just like us in the equity space.
Well,
we're the Lone Ranger.
Not rub salt there. Well, yes, the volumes are really low internationally as well. Most of the international markets, the big exchanges where they are situated, those markets are also shut. So we're looking at lower volumes right now. But let's start with the good news, and that clearly comes in from the crude oil prices. India being one of the major importers there, we have seen crude oil prices decline by 10% in 2023. This has been the first annual decline since 2020. Last year, we saw the prices gain up by 10% as well. So what we are seeing is, a narrow range coming into the markets. There was a lot of conversation that we could be looking at $100 a barrel. That did not happen. The range that we saw in the previous year was between 70 to 96 on the higher side. There are, of course, concerns about increasing global supplies and weak demand, and that is putting pressure onto those prices there. So while the previous year's range has been 70 to 96, markets do believe that this year as well, you could be looking at that kind of a range there. The U.S. production is at an all-time high at 13.3 million barrels per day. We also have seen a continuous decline in rig count in the previous year, but that doesn't really matter because even as we are working with minus 157 of a rig count, last year was an increase of 193, and before that an increase of 235. So if you look at those numbers, we still are on the higher side of rig counts and production that is coming in from US as of now. The other thing is about record production that we also are not just looking from US, but from Brazil, Guyana and Canada as well. So the non-OPEC production is expected to increase. Within OPEC as well, as this new year and new quarter begins, what OPEC and allies did put out in sense of an agreement was a cut of 2.2 million barrels per day. If you look at that breakdown in various countries, the major heavy lifting is being done by Saudi Arabia at almost 100,000. We have seen Russia put in a big chunk as well. And then as we go down the list, it really is insignificant on what these members are doing. And also Angola leaving OPEC the membership is something that has put further pressure onto those prices as well. When you talk about the outlook in the next year, well, the average outlook for Brent for the next year, the most bearish of it comes in from Citi at $75 a barrel. And then you have 80 and 85 is what Goldman Sachs, JP Morgan, Morgan Stanley are putting in at. The most bullish that we've seen on the higher side clearly is 90 to 95. That comes in from Bank of America to Barclays. But as I said, most of these brokerages and banks believe that 70 to 95 is where you could be looking at the crude oil prices for this year as well.
Okay, got that, Manisha. Thank you very much for the updates over there. We do